On that note, I want to bring in Ladenburg Thalmann Asset Management President Phil Blancato, Bulltick Capital Chief Market Strategist Kathryn Rooney Vera, and Kaltbaum Capital Management's President Gary Kaltbaum. So the shortest bear market in history, straight out, Gary, is it rational or irrational?
You're on fire, Charles. What goes on there? Wow. Look,
I love this, man. I love it.
I couldn't tell. Look, let's start with the rational side. Target gangbuster numbers. It deserves to be a new high ground. The irrational side, earnings are down 53% year over year for the S&P 500, and you have 15 trillion bucks by the European Central Bank and Jay Powell sloshing around, which causing a bunch of all this. If earnings do not come back, there'll be heck to pay. If they do come back, we'll be in good shape. And let me be clear, corporate America is doing real well. I am seeing some real good things in names like Visa and MasterCard look like they're heading to all-time highs again. That's where I'm heading right now. And of course, you see the great category killers just continuing to go crazy to the upside right here with no end in sight. Right. And those are the names I own right now.
Kathryn Rooney Vera, rational or irrational?
Well, I think it's rational, Charles, if you consider that one of the biggest motors of this 45% increase is stimulus that's unlikely to slow down or stop or end anytime soon. And that comes from both the federal government and the Federal Reserve. So when you have a Federal Reserve that's taken their balance sheet from $4.5 trillion to almost $8 trillion and is on target to $12 trillion by the end of the year, and 4 times the deficit so far this year, I think consumption has certainly gotten a boost from that. What I'd like to see is consumer confidence match multiples. The ascent in multiples has been tremendous. Right. We're at 26.5 times earnings. Gary's right. Earnings have to match prices. The denominator has to make up for the numerator's ascent.
And real quick, Kathryn, because I want to get Phil's thoughts. Initially, though, you called for a V-shaped rebound, didn't you?
Yeah, and it is a V-shaped rebound. Certainly. I mean, we've seen that. What have been the drivers of that, though, right? I mean, we've definitely seen fiscal reaction, monetary action make Lehman Brothers look like child's play.
So it's overdone for right now. I want to bring in Phil Blancato. Phil, break the tie, rational or irrational? Actually, I think they're both on the quasi-irrational side, but what do you think?
I'm going to say irrational, buddy. I grew up in the fact that we need data to support valuations. And right now, I
feel like I'm playing that slot machine, Phil. Will you pull the handle and 3 lemons come up? But continue.
Sorry, buddy. I'm sorry. But and look, I've talked many times about how you want to participate in these markets, but you want to be cautious about buying high-quality names that are benefiting from the environment we're in. But you don't want to make a bet on energy here. You don't want to make a bet clearly only on financials. Maybe you want to start to dip in because valuations are better. Mm-hmm. But the reality is we're not out of this yet. We still have 14 million, 15 million people looking for work. So we're still struggling to break out of this, and we need more from the medical front to get there.
I don't disagree with that at all, although I do believe the improvements in COVID-19 over the last week have been stealthy because the mainstream media won't report them, but I think the market senses that. Let's go back to earnings. Gary brought it up. They've been phenomenal, right? Monster beats, major companies that are proxies for this economy. I think that even though we thought, listen, Lowe's is going to do well, Target's going to do well, no one had these kind of optimistic expectations. So let me go back to you, Phil. I mean, think about this. Your comp store targets for sales for Target, Lowe's, a million miles ahead of Wall Street. So is it just sort of certain industries, or can this sort of hint at a broader economic rebound when all of those other boxes are checked?
There I would agree with you. I think we have the potential for a much broader economic rebound because of the work the Fed and the federal government did. And you saw it come through with canceling vacations and 195% online increase in sales at Target. So the consumer is in much better shape than anticipated going into it. And for that reason, if Regeneron or Eli Lilly's therapeutic works, we turn this thing back on and you're plus 10 for the year on the S&P 500. That's because of the strength of the economy, the potential to turn back on much more quickly if we get that therapeutic that we so desperately need.
Let me go back to Gary for a moment. Gary, estimates of about $8 trillion on the sidelines, right, between money markets, corporate cash, private equity cash. If the well runs dry from the Federal Reserve and the federal government, could that money come in and serve as a spark for this market?
Well, first off, the well isn't going to run dry, but yeah, that's fuel, no doubt. And just remember, greed begets greed, and the market's on the greedy side right now. And Charles, I've been calling for a melt up just based on the technical things that I follow, but it's not everything, because I can tell you, airlines, cruise lines, hotels, energy, financials are still not going anywhere. But the names like Wayfair and Target now and Lowe's and Home Depot and some of these other technology names in software and cloud, they're just insane. Of course, the FANG names, which I don't know what's going on there, but people are just piling on each other, continue. And again, I think NASDAQ 14,000 could be in the offing here just based on all the money flowing from ECB and Jay Powell, and we'll see where it goes.
All right, so Kathryn, how do you position your portfolio, understanding your skepticism, but by the same token, because you knew there was going to be a V-shape, wanting to be right in terms of making money?
Well, I think we can. I don't want to sound negative, Charles, because I think that we can come out of this strong, and we already have, and we're certainly in a V-shaped recovery. But what has to happen, Charles, after we stabilize is for both federal and monetary stimuli to be retracted, at least to pull back a little bit on the velocity of growth, because I think that leads us into uncharted waters. So right now, what I'm telling my clients is you have to be in the markets. You have to be in the markets because you have a price-insensitive buyer that considers itself limitless in its power, and that's the Federal Reserve. So our game here is to see what the Fed is going to buy next. And I've talked about fallen angels on your program. Ford has done exceptionally well. I think there's more to come. When the market dips, if it dips, because we get a conflagration with China because of electoral tumult or what have you, or second bout of the virus, I think that's a buy. And the reason is because the Fed is going to step in. So I think this is good if we can get through the hump and then retract a bit of this inordinate spending later on, which I doubt is going to happen.
All right, well, Phil, we've got a minute to go. I want to get your thoughts because what Kathryn is talking about some of those potential outcomes or things that could happen, you happen to also like the healthcare sector as well.
Yeah, the demographic change in the United States is daunting. So think of it this way. The leaders are going to be tech and healthcare specifically on the other side of this with 11,000 boomers retiring every day. There's your opportunity to buy healthcare, and it's not terribly expensive in certain sectors. However, to echo a little bit what Gary said, I actually think there's a massive opportunity in those underloved sectors. Your PE ratio on the Russell 1000 growth is 40. It's 21 on value. So here's your opportunity. I do think we're lemons right now, but we're on the other side of this. Assuming we get through the election and we get a therapeutic, you got a chance right now to buy the airlines, buy the hotels, buy the retailers, and buy the banks inexpensively, because the market in 12 to 18 months is not going to look like this. So here's your opportunity. Begin your rotation back to value.
You guys are always peaches to me. When I hit the slot machine with you guys, it comes up peaches. I will say this, though. I think I'm in agreement with Gary, and I'll paraphrase. Heck yeah, all hell will break loose if the Fed tries to take back even a little bit of this accommodation. So we'll see, Kathryn. Phil, Kathryn, Gary, you are three of the best. Thank you all very much. We'll talk to you again real soon.